Our next speaker, who is not Dr. Richard Swart, Jillian Hellman, is the CEO of Realty Mogul. I know many of you who are here today are very excited about what's going on in the world of crowdfunding as it relates to real estate. We were talking outside, and the one area that when I got involved with crowdfunding, I didn't see it coming was real estate. And I should have, because it's obviously the most logical of all. You have an asset. You have something that people can feel comfortable about. You have something that people love to invest in. And yet, people are always talking about startups and inventions and products. But real estate, and all forms of real estate, are a phenomenal function of crowdfunding. Realty Mogul, you're going to hear all about it. This is wonderful. Jillian Hellman, welcome to the stage.
Thanks for having me today, and I'm looking forward to the rest of the day and sharing a little bit about our experiences in crowdfunding, and also to kick us off with kind of a level set today is my goal and my aim. So real quick background about myself. I came out of the commercial banking industry, so big bureaucracy, $90 billion company. I spent most of my time in wealth management, working in the stock world, working in the bond world with high net worth individuals, endowments, nonprofits, funds of funds. And I didn't think that the markets made any sense. This is before this whole idea of high frequency trading came out a couple of weeks ago. There's been a lot of coverage on that, but for me the markets just weren't making sense. And I was waking up every day and being compensated to work with high net worth clients to put them into the financial markets. I'm talking about the publicly traded markets. I grew up in a real estate family, so I've been exposed to real estate since I was a child. And finally had this catalyst where I said, I need to go into real estate full time. And I started investing in real estate while I was still in big banking. And I made sort of maybe the grave decision to liquidate 100% of my net worth in stocks and bonds and go almost exclusively into real estate, except for what was in my personal retirement accounts. And a lot of people looked at me and said, you're nuts, you're out of your mind. I kind of was nuts and out of my mind because the markets have still held together, so I would have made money had I stayed. But for me, the fundamentals just didn't make sense, and I'm a big believer in real estate. I want to talk today about the difference between invention and innovation. And I wish that I could stand up here and say to you that I'm an inventor, because I think inventors are some of the most marvelous people in the country and in the world. I am not an inventor. I am merely an innovator. And when you think about innovation, I think crowdfunding is the greatest innovation in capital markets that we've seen in at least 80 years, and we'll talk about why that is. But I really want to talk about this concept of innovation, what drives innovation. I met with a couple of people in the room before coming up here today, and I have a fairly good sense that there's a lot of entrepreneurs in the room. There's people who understand the basics of crowdfunding, so I'm not going to dive into any of that, but I want to talk about why I think this is making such a pivotal shift in capital markets today. When you think about innovation, there's typically always a catalyst. And when I started thinking through why I started this company and why I think crowdfunding is going to be such an integral part of the future, the catalyst in this case was political. And it's not dissimilar to what's going on in healthcare right now, where you've got political changes that are creating massive amounts of new companies in healthcare, whether they're healthcare consulting companies, whether they're new healthcare companies, just to learn the rules. And it's very similar in crowdfunding. Not only what happened in Georgia and what's going on in the states, in North Carolina, for example, but obviously at the federal level with the Securities and Exchange Commission. And I've seen regulation as a catalyst for innovation. So regulation as a catalyst for innovation, that doesn't make a whole lot of sense, right? Typically regulation would be at odds with innovation. In this case, I think that regulation has actually allowed us to innovate, and that's a really interesting distinction around crowdfunding and around, I think, the type of people that you're going to see running crowdfunding companies. They tend to come out of more regulated industries. Myself, my last gig before leaving the banking industry was working in risk management. So before I was an entrepreneur, I'm doing broker-dealer regulation, I'm doing RIA regulation, I'm working with Dodd-Frank and Basel III, all the things that are set out to stop entrepreneurs. All of the regulatory pieces that just say, no, you can't create your business here, and no, it's going to be too hard, and just go back to sleep. So it's really interesting to see that regulation is this catalyst for innovation. So let's talk about innovation, and I think there's three things around innovation. There's people, there's product, and there's process. So if you want to innovate, you have to innovate around one of those three: people, product, or process. And I want to talk about our own company for a second. And again, this relates back to me not being an inventor, but being an innovator. And let's talk about product. I am selling real estate securities over the internet. I am selling the exact same product or similar product that has been sold for probably the last 100 years, though it used to be sold in sort of this old boys network, this old boys club where you had to get access to real estate transactions at the country club or in a very high net worth environment. But it's the same product. We're selling shares in apartment buildings, retail shopping centers, self-storage facilities. We just crowdfunded the first retail shopping center in the country outside of San Francisco. Right now, we're working on the first branded hotel in the country. We're crowdfunding the Hard Rock Hotel in Palm Springs, which is a really fun offering that we've been working on the last couple of weeks. But frankly, it's the same product. And when people ask me, oh my gosh, I've never seen products like this, how do you guys find this stuff? Our model is we scour the country looking for real estate transactions for our investor database. But at the end of the day, high net worth investors and a subset of high net worth investors have had access to the same product. And a lot of people, when they talk about crowdfunding, they talk about democratization of access to capital, getting capital back to where capital is needed, whether it's in communities, whether it's in small businesses, whether it's in startups. I think about it totally differently. Not that I don't want to support the community, not that I don't want to support startups and new businesses. I am a startup and a new business, but I really think about crowdfunding as access to deal flow. So I don't think that the fundamental product has changed. I think that the fundamental process has changed. So one of the big spaces that we're innovating, if you think of people, product, and process, is around process. We are opening up access to these real estate transactions through the internet, which has never been done before. And what that means is that we can have a wide variety of investors from all over the country, and frankly, I think it's going to be all over the globe by the time I'm done. But there's some regulatory issues around that I really do think will change over the course of the next probably 8 to 15 years. But the process allows investors from all over to invest in real estate. And I know that Dr. Schwartz is going to completely come up here with data and ruin this comment this afternoon, because I saw him in Los Angeles this week and we had a conversation about this. But our data is very different than the macro data. Our data says that I can take an investor from New York City and they will invest in Texas, they will invest in California, they will invest in Memphis, Tennessee, they will invest in Atlanta, Georgia. Our data is showing that investors will go across state borders. We're only domestic today, so I can't speak to global borders, which I know is different than a lot of the data around crowdfunding, but I think it's fundamentally because the process is different. You can make a real estate investment on realtymogul.com in less than 5 minutes. And that has never been done historically in the life cycle of private securities transactions, whether they're in real estate or they're in another vertical. So if someone sitting in this audience wanted to invest in the Hard Rock Hotel, Palm Springs, you could do it before the time that I am done speaking, and I'll be fast. The third one, I've talked about product, I've talked about process, is people. And I think we are innovating around people as well. And this has to do with this concept of access to real estate transactions and the type of people who historically had access, which were your higher net worth, highly affluent investors. Today we're reaching out to investors who are newly accredited. We are still limited to accredited investors on our own platform. We are strictly accredited investors because we rely on federal exemptions, namely Reg D 506 for the attorneys in the room. But we have individuals who have never made a real estate investment before. We've got a really interesting thing happening right now in our own database. We've got this strange contingent from Google. So we'll have a Google software engineer invest, and then 20 minutes later, we'll have another 20 grand come out of Google, and then 10 minutes later, another 20 grand come out of Google. And I think they're all kind of investing together at lunch. It's very, very, very interesting. And we're starting to see this happen at a couple of other companies. They tend to be high-tech companies. Our investors tend to be younger than what you would expect of your average real estate investor, albeit still accredited and validated accredited. But it's really interesting that we're innovating around people as much as we are innovating around process. But again, I think the product is still fundamentally the same. And I would argue in crowdfunding, the product has not changed. So think about that as you're building crowdfunding companies or you're an entrepreneur, how you can address that and really how you can be so phenomenally better at process and people that it doesn't matter that we're selling the same product. There's also this concept of the speed of innovation and early adopters. And we've been in business now, operational 13 months. In 13 months, we've done about $150 million in property value. We have crowdfunded over 60 real estate transactions. We are live in 14 states with projects. We have investors in every single state in the country. We've probably got over 20,000 investors in the database now. About 9,000 of them are accredited. About another 11, 12,000 of them are non-accredited that we're not working with today. But massive adoption and interest in what we're doing. But the really interesting thing for me is the speed of innovation. In the beginning, 18 months ago, when I was trying to convince real estate companies to use this, they thought it was completely out of my mind. Literally, I would walk into multi-billion-dollar real estate companies and say, crowdfunding is going to change your industry. You should get involved now. We'll give you fantastic treatment. We'll do anything that we can to convince you to use the platform. And the doors just kept shutting. No, 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 no. Historically, it might take a year, 2 years, 3 years for these industries and really these massive institutions to catch on. A mere 12 months later, we've had over 2,000 real estate companies who are now banging down our door to raise capital with us. And it's shifted. Now we're saying no to all those real estate companies, which is really interesting, and that's very, very, very rapid. That has not happened this quickly in financial services and in capital markets ever. I'll share another example. There's a firm called Lending Club. Lending Club is the largest peer-to-peer lender in the country right now. They've done about $3 billion in transactions. And Lending Club is a company that is very near and dear to my heart because I think that their CEO is absolutely brilliant, and so much so that I went after the biggest investor in Lending Club, which is a firm called KEYNOTE Partners, and KEYNOTE Partners just put $9 million into our company. So the rationale behind that was because I wanted to learn from what Lending Club did, and I wanted to figure out how Lending Club grew to be a $3 billion company that has just announced that they're going to be doing an IPO this year. And what I learned was it took them about 8 years to do that. And it took them 8 years to do $3 billion. There is no way it is going to take this industry 8 years to do that. I mean, the speed of innovation has changed so dramatically since the date of Lending Club, and Prosper is another example in the peer-to-peer lending space. And already we can see it that we've cycled through early adopters, and now we're really working with mainstream, and there's a high degree of interest in crowdfunding. And it's just a very different experience now when we call real estate companies, when we call real estate sponsors, and also when we work with investors. A very, very, very high percentage of our investors are repeat investors. They see us as their allocation to real estate. Now, I would never tell an investor to allocate all their capital in real estate like me. That's a unique circumstance. But typically investors will allocate anywhere from 5 to 20% of their investable assets into real estate, and we're seeing them come to our platform specifically to get that diversification. And we offer diversification across 3 different tranches, if you will. One is property type. So we do apartment buildings, we do self-storage, we do office, we do retail, we do hospitality. The other is geography. So Texas, California, Atlanta, Tennessee, allowing investors to have geographic diversification. And the last is asset type. So we invest in both equity and debt on our platform. We've spent a lot of money on technology. We've already distributed out millions and millions of dollars to investors. And I think that really helps to create virality in your software and virality in your system. I met a couple of other people who are starting platforms or looking to start platforms. So my advice, if you're doing something in equity or debt-based crowdfunding, is get capital out of the system as quickly as possible. And that's something that I learned from Lending Club that I just take very, very seriously. So for us, it's distributing millions of dollars back to investors. So I'll share 2 more stories, and hopefully we'll be back on track on timing. So one is in the very, very early days of our business. And in the very early days of our business, it was myself, my co-founder, who runs our technology and our product, and one other employee. Our first employee at the company was a general counsel. And I can speak to the importance of legal and regulation if I haven't already alluded to it after the conversation. But it's Saturday morning. It's probably 6:30, 7 o'clock in the morning, and I am not a morning person, so it's lucky that I'm awake this morning on California time. But I get a phone call from my co-founder, and it's a he's freaking out on the other end of the line. I go, "What's going on? Talk me through it." And he goes, "Have you checked the bank account?" I go, "No, I haven't checked the bank account. It's 7 o'clock on Saturday morning. Why would I check the bank account?" He goes, you need to go check the bank account. Okay, I go check the bank account. I think like our money's evaporated or something. So I go check the bank account, and we have a wire for $500,000. And I go, "Oh, fantastic, interesting." And he goes, "Jack wired us $500,000. And this is less than 30 days into the business, right? Less than 30 days from launch. And I go, "Great, who's Jack? And have you talked to Jack? How was your conversation?" Because we used to communicate with our own investors. He goes, "I've never talked to Jack." And he goes, "Have you talked to Jack?" I go, "I don't know, let me look." So I look it up in our system, and I go, "I've never talked to Jack." So we call our third employee, or our first employer, our third partner, and say, what conversation did you have with Jack, and have the conversation? He goes, "I've never had a conversation with Jack." And so I go, "Okay, Monday morning I'm going to call Jack and say, welcome to Realty Mogul. I'm the CEO. We're so glad to have you. you're a fantastic client. If we can ever be of help, don't hesitate to reach out and just, do a feel-good call. So I do the feel-good call, and Jack picks up the phone, and he goes, the reason I invested with you is because I don't want to talk to you. Click. Complete innovation around people, right? Complete innovation around people. And it's a really telling indicator of how crowdfunding is different. We're going to grow to a multi-billion-dollar company without having an army of brokers, without having an army of financial advisors. It's really the power and the scale of technology and the power and scale of the internet. And it's astonishing that someone would do that, but that's how the younger generations, and I'm skewing this a little bit, but it tends to be younger generations want to invest these days. They're smart, they're savvy, they're sophisticated, they want to do it themselves, they grew up with technology, they grew up with E-Trade and Scottrade and online broker-dealers, they're comfortable in technology. It's a really important facet that we've learned at our own company. And that's not to say that we didn't do diligence on Jack, right? I mean, we have Know Your Customer, we have anti-money laundering directly built into our system. You have to, follow regulation and do your diligence and do suitability analysis. And we do all of that through our technology, but we don't now have to call people for them to fund. And that's fundamentally different than the way that the entire capital markets has been, in ever, frankly. So the other story is just a fun one, and again, it's kind of this concept of innovation, and I like to steal from companies where I can, and not in an unethical way, but in a highly ethical way. So I remember when I was a kid, my first email account was AOL, and I know there's some people who had Netscape and all these ones even before AOL, but mine was AOL. And I had this strange affinity to going onto AOL and clicking in and hearing the "you've got mail," right? It was this kind of this tone that went up, and so when we launched Realty Mogul, and I shared already my affinity for cash flow, all of our emails now say "you've got money," and it's really, really fun when every month we get to send out thousands of "you've got money" emails. Again, we didn't invent it. It's another small example of it's not something that we invented. It's just something that we innovated on. So innovation's a lot of fun. I'm having a blast running this company. I love being part of the crowdfunding industry. Brian was joking with me. He's like, you're at every crowdfunding event everywhere. When do you eat or sleep or have a life? And this is my life. So it's really exciting. I'm happy to share my experiences, happy to share what we've been through at Realty Mogul, how we continue to grow as a company. And just keep in mind that we're all innovators in this room. And there's a lot of different ways you can innovate. You can innovate on people.
We're going to take about a 5-minute break, and then we'll have our first panel come up, and we'll start, let's say, 10:10.